Welcome back. Let's take a look at our Money Watch report. The government just released the July report on inflation this morning. So CBS News business analyst Jill Schlesinger joins us live now from New York. And Jill, inflation has come down dramatically since peaking over 9% last summer. So what are we seeing happen in July with that?
Well, July, we saw prices increase a bit. They were up 3.2% from a year ago. That's up from the June reading of a 3% annual increase. Now, I have to say that the weird quirk of this rise, the annual rise, has more to do with what was going on in June and July of last year. That's called a base effect. So I wouldn't worry too much. In fact, the report came in somewhat better than expected. The core rate ticked down by 0.1%. Core rate up by 4.7% from a year ago. Overall, this report showed that inflation is still coming down. It is coming down in a lot of the categories that many people care about.
Yeah, and that's what a lot of people are keeping an eye on, too. But the housing price component, Jill, of the report, it's remained elevated. So was there any easing last month with it?
Yeah, this is called shelter in the CPI report, and it's been a real thorn in the side of economists. It shows a 7.7% increase from a year ago. That's down slightly from 7.8 in the previous month. But this component has come under pressure. A lot of economists I speak to, they say, look, there are more timely measures of rent that are showing moderation. So look to, say, the Apartment List's national rent report. And in August, they found on average apartments today nationally are renting for less than they did a year ago. That's a huge improvement when we were seeing double-digit increases last year. So what I want to point out is that shelter component should come down in the future. It's important because the Bureau of Labor Statistics itself has said to us that part of that big growth in the 3.2%, 90% of it is attributable to shelter.
I can believe that. So, Jill, the Fed's next policy meeting is not until September. So what will the central bank be watching from now until then?
Chair Powell has said that they want to see inflation come down. They want to see a cooling in labor market conditions. And that means that the Fed, who says they really care about data, they're going to have another employment report, another month of inflation data before the next policy meeting in September. Right now, the bond market is betting a 50-50 that they raise rates by 1/4 percentage point. And that could happen at the September meeting, but it could also happen at the November meeting. So right now, probably, I would say a 50-50 shot, you get another 1/4 point. I'm guessing they'll pause at September and wait to see even more data.
All right. This is definitely a wait and see situation. A lot of people looking to see if those interest rates are going to go up even more. All right, Jill, thank you so much. For more analysis, go to jillonmoney.com.
Sure.